it is just a rat's nest of misinformation out there. So you're absolutely right. It's very important to do this right.
Hey investors, Brett here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Today, joining us on the show is Robinson Smith. We're going to talk about the Smith Manoeuvre, and I've been chasing this dude to come on our show for some time, and I got a message back that he was willing to join us because we've been talking about the Smith Manoeuvre a lot. You've probably heard it somewhere along the way during our podcast, but it's a very, very powerful tool. There are many promoted tools in the industry, but I believe this one to be one of the more effective ones for regular Canadians, which is why I'm thrilled that Robinson took the time to join us to give us a little bit of extra understanding on how this works and a little bonus on if you have investment properties, how to really rapidly, or as he calls, accelerate the program. Just a little bit about him, some interesting and fun facts. He has a double major in Chinese studies and economics from the University of Victoria and an MBA in international business from Simon Fraser University. He actually lives out in British Columbia, but he joined his father, who's the founder, the developer of the Smith Manoeuvre at Smith Consulting Group Ltd back in 2006. And has been working on the strategies. They've helped over 500 families. Well, recently he's kind of changed things, has changed his plan in order to expand it through courses, a book that hit, from what he told me, #1 in 22 categories on Amazon on the day that it was released. So very good insight, good information. He's also training folks across the country to help regular Canadians be able to apply what he calls the Smith's Manoeuvre. If you've never heard of this, please don't change the channel. You're going to learn a ton. And I think this could be life-changing info for you. For those of you who have heard of the Smith Manoeuvre but haven't implemented it, hopefully this comes at it from an investor's perspective and gives you some fresh new eyes, a fresh look at a strategy that is helping many, many people. I'm thrilled today to be joined by Robinson Smith. And if you could support the show, hit the like button, leave us a comment, do what you got to do, light up my DMs on Instagram. You can tag us at Watson Estates. Enjoy the show. Robinson, thank you for joining us on the show. How you doing?
I'm 100%. Yourself, Bradley?
Good. Very good. Man, anytime somebody comes up with a strategy that they call maneuver, we know it's something we need to be paying attention to. So I'm thrilled you could join us on the show today. Maybe tell our audience a little bit about yourself so we can kind of get familiar with your history. And I'm really excited to dive into the strategy. I've been kind of chasing you guys for a little while here, so I'm glad we were able to put this all together.
Yeah, well, very happy to be here, Bradley, even though it is 7 a.m. my time out here in Victoria, but I'll forgive you. So I am currently the president of Smith Consulting Group Ltd. It's a company that my father started many years back. Went to university out here in Victoria, worked over in China for about 8 years in various positions, and came back in 2006 to Victoria to start working with my father alongside him. He wrote a book on the strategy in 2002, the Smith Manoeuvre, after putting his private clients into the strategy he pioneered back in the mid 80s. So I was an investment advisor alongside him for quite a while. He passed away in 2011, but I kept on going here in Victoria until 2018. And I sold my advisory, after helping 500 families or so implement the strategy, because it was time for me to get out and let Canadians across the country know about the strategy, because it's not easy out there, as we know. So sold my advisory and wrote my book on the strategy, Master Your Mortgage for Financial Freedom. And since then have been educating Canadians, spoken to thousands of people on various podcasts, interviews, webinars for personal finance groups, real estate investment groups. And apart from the education of Canadian homeowners on what the strategy is all about, also training up Smith Manoeuvre certified professionals across the country to make sure that there are professionals that Canadians can go to locally to help them implement. Because there's a lot of misunderstanding around the strategy amongst the Canadian public, amongst financial professionals, et cetera. So I've been in the investment and finance world for a good number of years now, since maybe about 2002, 2003. And just started a few years ago, a new chapter of my life, getting out to help Canadians improve their financial situation.
Yeah. And I'm really excited that we're able to be one of those platforms for you to share. many of our audience, we have a pretty savvy group of folks that listen to our podcast. And I have no doubt that many of them have heard of the Smith Manoeuvre over the last few years. In fact, I talk about it on my show occasionally too. So this is why I'm really excited that you're able to, what you're doing is you're taking something that's kind of a tried and true practice and you're really scaling it. And I can see that. And I respect that. And I guess the ultimate question, and maybe we'll head there later in the show, is how can people maybe not being face-to-face with you still learn the strategy and maybe get more involved? Because I think by the time we're done here, people will have at least an interest in figuring this out more. But I also agree when you say there's a lot of misinformation, because there's a ton of content online. I would caution folks from listening to content that doesn't have your face on it, or that's not kind of branded and done the proper way, because I think the products, and there's just a lot of holes that ultimately you're trying to, it is a maneuver. We're trying to imitate what's happening in the US. And so it needs to be done properly, or you're going to have the CRA a little bit mad at you at the end of the day.
Well, that is definitely the case. I've got alerts that come in whenever Smith Manoeuvre is mentioned in social media or the internet, forums, that sort of thing. And it is just a rat's nest of misinformation out there. So you're absolutely right. It's very important to do this right. We're dealing with mortgages, we're dealing with the CRA and taxation, we're dealing with investment. So it's not an overly complicated strategy to comprehend, but there's a lot that moves in the background, and you really do need professionals to help you set it up right, help you implement it, and guide you along the way.
Yeah. Okay. So let's dive a little bit into it here. We're going to just set the tone for a bit of interest, understanding those basics and the concepts. And then by the end of it, obviously, we're not going to be able to go through all the details on a podcast, at least on a single podcast. So we'll leave it up to the audience to contact you and people will figure that out. But I think this is going to be interesting. It's going to be, even for people who have heard this before, it's a really good refresher, and it makes you wonder, hey, what am I doing with my mortgage? So maybe walk us through, I'll give you a little bit of time here. Walk us through, what is the Smith Manoeuvre? Why is it needed? And what is the solution? What's that kind of master formula that's been developed?
Yeah, well, I guess why it's needed. We Canadians are consistently within the top 5 highest tax-paying citizenry on the planet. And that's not going to ease anytime soon, right? We pay more in taxes than we do on food, clothing, and shelter combined, which are the basic necessities for simple survival. So we pay a lot of tax. Excuse me. And life is expensive. We've got, just came out 4.4% inflation rate now. We've got pension insecurity, income insecurity. Kids are expensive. So life's not cheap. And, as I said earlier, over 500 families as clients, I saw many, many families earning well over 6 figures, finding it very difficult to make ends meet. So, and nobody cares if we take care of our financial situation, right? Nobody's looking over our shoulder. We have to take care of it ourselves. So we have to pull our head out of the sand and explore different financial strategies. And the Smith Manoeuvre is one of them. And it's a strategy which will help reduce your tax bill. It's going to help eliminate your expensive mortgage much quicker than anticipated. And you're going to be able to start saving significant sums on a monthly basis with funds that simply otherwise wouldn't exist. And so reduction in tax bill, reduction in amortization of the mortgage, increase in net worth with an investment portfolio. And all of this occurs without having to come up with any additional cash on a monthly basis. So it's one of the few, if not the only, financial strategies which actually improve your cash flow as you're implementing it. When we go to a financial professional in Canada, we say, hey, times are tough. I'm not saving enough for my retirement. It's looking bleak. I need to do something. What can I do? Well, the typical advice we hear is max out your registered contributions, pay off your consumer debt, invest more, all of these different things. But the common thread here is they all require more cash flow from the investor, from the Canadian. So they detract from our standard of living. because now I need to put money aside to either pay down debt or invest if I'm going to get where I want to go, which means I have less left in my pocket. So the fundamental principle of the Smith Maneuver, how it works, is it's a debt conversion strategy. When we Canadians, we get a down payment together, we go to the bank, we get a mortgage, and now we buy our house. Well, all of this mortgage debt is not tax deductible. It's very expensive, even at today's low rates. It takes a big chunk of your paycheck. You know, a $450,000 mortgage, you know, at a 38% marginal tax rate, amortized over 25 years with current rates, we have to earn over $1 million to pay that back. We got to pay the principal back. We got to pay the interest. And we only make those P&I payments after we pay tax. And that's the math that many Canadians don't like to do. It's terrifying math, over $1 million to pay back a $450,000 mortgage. So right. Life's expensive, but what we do with the Smith Maneuver is it's about utilizing debt, it's maximizing debt, doing what the wealthy do, learning from the wealthy and emulating them. The wealthy are wealthy for a reason, right? They understand debt. And they use debt to their advantage. And there's two types of debt. Typically, Canadians think of the word debt, and they've got this, they lump it into this one big dark cloud, right? Debt is bad. Well, there's two types. There's non-deductible debt and there's tax-deductible debt. And the wealthy understand this very well. They don't have a whole lot of non-deductible debt, if any. What they do have is tax-deductible debt. So with the Smith Maneuver, if we've got the appropriate financing, if we've got the right type of mortgage, what we're able to do is utilize the equity in our home as fast as we're creating it to put it to work. Otherwise, if I've got a 25-year mortgage and I'm paying that off month after month after month, while my bad debt, my non-deductible debt is decreasing, my equity is increasing. I'm increasing the equity in my home. And if I'm not putting that to work, it's earning me less than 0%. Right? It's not invested for growth, and plus there's the effect of inflation. So with the right type of mortgage, which is called a re-advanceable mortgage, whenever I make that principal plus interest payment, some of that payment goes to interest. It's gone. That's the price I pay for borrowing that money from the bank. But part of it reduces the principal. And a re-advanceable mortgage allows us to access any equity we create by making mortgage payments. So if I pay my mortgage down by $1,000 month one, I can pull out $1,000 and I can get it invested. Now, what we do with this money when we pull it out is very, very important. Many Canadians, they'll have a re-advanceable mortgage, not necessarily know it, but the bank specialist or the mortgage broker put them into a re-advanceable mortgage, and then they get their monthly statement and says, oh, their line of credit limit keeps on increasing on this statement. Great, $1,000, I can make a BMW payment with that. Fancy dinners, buy a boat, all of these sorts of things. What we're doing in this case is we're paying down non-deductible mortgage debt on one side, and we're re-borrowing non-deductible debt on the other side to buy toys and vehicles, all the stuff, things that depreciate or disappear in value altogether. Plus the interest is non-deductible. Well, if we borrow as Canadians and invest with the reasonable expectation of generating income, we can deduct the interest on that borrowing. And you doing what you do, Bradley, would be very clear on that. And a lot of your listeners will as well, if they're interested in investment real estate and that sort of thing. So when we refinance into the appropriate mortgage, or maybe we already have the appropriate mortgage, we just need to restructure it. We're borrowing to invest on a monthly basis, which is reducing our tax bill. We get a refund at the end of the year. And this cash that we receive from the government, we otherwise wouldn't receive. And so we got to be disciplined here. We got to take this tax refund and make a prepayment against our mortgage. And then we can reborrow that back to invest as well. So we're reducing our tax bill. We're getting money back from the government each year. We're able to prepay our mortgage with that money and get that invested as well. So getting rid of the mortgage much quicker means we're paying less in non-deductible interest. Getting rid of that mortgage faster is better. Plus, we're investing on a monthly basis to improve our net worth and our retirement prospects. And none of this, as I mentioned, requires any additional cash flow from the homeowner. It's simply restructuring their financial affairs to their best tax advantage.
What I like about this idea is when we go into approaching as a business person, someone who invests in real estate, when we look at things like accounting or structuring and the legal side, oftentimes there's costs or there's a setup that needs to happen, and we get it into a position that it will end up saving us a lot of money in the future. But when it comes to doing a mortgage, often we just kind of lock in 5-year rate. There's not a lot of thought surrounding that. What I love about one of the things you mentioned is that it's not adding any additional cash flow, or that there's no extra cost to you. It's simply just a better structure and a smarter approach up front that ends up saving you tens, hundreds of thousands of dollars. One of the other things that you said that really resonate, I love this idea that there's this idea out there that we're going to reduce our mortgage and therefore be out of debt. But I love you're trendy in the sense that you recognize the day that we're in, and having a mortgage can actually significantly benefit you, the ability to use that leverage, especially with rates as low as they are today. So though, yes, hypothetically, you could pay the mortgage off, that's not the strategy that works. And I think that you coming from that approach shows the honesty, the integrity of maintaining that balance, but then using it in income producing assets, which is a slam dunk for our listeners that want to invest in further properties and grow. Is that something that you would recommend simply for a primary residence, or do you see this spiral, right? You see investment properties also doing the same strategy, and I could have a portfolio of 10 properties that I've all implemented the Smith Maneuver under.
Well, now we get into the fun stuff, Bradley. But before I go there, just to touch on what you mentioned earlier, we've had it drilled into our heads that, by people older and quote unquote wiser than us, that if you got a mortgage, you got to get rid of it. You got to pay it off. You got to be clear title to that home. And as I said earlier, all we're doing is building up non-productive equity in that home, waiting for a reverse mortgage when we hit 55, 60, 65 years old. The more equity you have, the more money you can get via reverse mortgage. Well, if you're going to use your home as some part of your retirement plan, use that equity now, invest that equity now, rather than consume it later via reverse mortgage. So to follow on, when you're talking about, where does this strategy go in the whole grand scheme of things, we have to remember that it's a debt conversion strategy. So as I said, when I have a mortgage on my principal residence, the interest is not tax deductible. Now, when I have an investment property, I've got a rental property on proprietorship, for example, it's just held under my name. I've got renters in there. I've also got a mortgage on that property, but the interest on that mortgage is already tax deductible,
right?
Because I borrowed from the bank. I got a mortgage to invest in a business, my rental property. So the Smith Maneuver does not apply to rental properties. However, rental properties can vastly improve the effectiveness of the Smith Maneuver because we have a number of accelerators. And before I go there, I want to say that although Smith Maneuver is designed for your principal residence, it is a debt conversion strategy, meaning if you've got a recreational property, you've got a cottage up at the lake, you can, that interest will be non-deductible on that mortgage. So you can implement the Smith Maneuver on that property as well.
So just to kind of, just for a second here, Robinson. So I get when you say, what I'm seeing here is when you say this is the strategy implemented by wealthy people, it's because that was, until the Smith Maneuver was designed through investment properties, this has always existed as a way of getting that interest deduction off your taxes. What you guys have created is a platform for regular Canadians to implement that, and wealthy Canadians to implement that on their primary residence and vacation home. So that's really, that's the secret sauce that's happening there that is able to allow you to make that statement.
Yeah. If you think about it, if I'm wealthy, I'm going to go buy my house. Well, I've got the cash to do so. So I can buy my home in cash. Do I just sit there and live in this home clear title? No, I don't. I go and I get a mortgage or a line of credit or whatever it is, secured against my clear title house, and I borrow funds out and I invest. That's what the wealthy do. If you say to a wealthy person, I live in a home and I have no mortgage, I'm clear title, well, they're going to look at you like you got three lips. It makes them shudder. Why are you having hundreds of thousands of dollars earning you less than 0%, right? So the wealthy have been doing this for a year, not necessarily via the Smith Maneuver, which is a step-by-step monthly process. They're doing it all in one lump sum. They can afford to pay the fancy tax lawyers and accountants how to advise them on how to maximize their taxation. So they've been doing it for years. What my dad Fraser came up with in the mid-'80s was a way for your average typical Canadian to do this. Now, back then, they didn't have re-advanceable mortgages. It was quite clunky, but it worked. Now we've got financing options available to Canadians, which make it very slick. So it is a wealth creation strategy, which using tactics that the wealthy have been using for years, that the average Canadian can apply to their own financial situation. So, when we're talking about, to go back to rental properties that you brought up, there are a number of accelerators with the Smith Manoeuvre. What I described earlier is make the mortgage payment, which you're going to make whether you're doing the Smith Manoeuvre or not, right? Whether you have the appropriate financing or not. You make the regular mortgage payment, some of that reduces principal, borrow it back, get it invested each and every month. Leads to a tax refund, prepay your mortgage, pull that out to invest as well. That is the plain Jane Smith Manoeuvre. And no cash is required out of pocket because you're just using the regular mortgage payment you're making anyways. Now, there are a number of accelerators which can speed up the process. The plain Jane Smith Manoeuvre is worth, for a typical scenario in Canada, about $350,000 in net worth improvement over the course of a typical 25-year amortization for a Canadian homeowner, and about 3 years off that non-deductible debt amortization. But when we throw the accelerators in, specifically or especially the cash flow dam, which is utilized when I have rental property or properties, we're looking at hundreds of thousands, 800, 900, over $1 million we're seeing a net worth improvement. And the amortization goes from 25 years to under 10, 7, 8, 9 years.
All right. So what is that particular accelerator? What's happening there? I missed that.
Yeah. So there's a number of accelerators: debt swap, cash flow diversion, the drip, prime the pump. But the cash flow dam accelerator, I've got a house in which I live. The mortgage is not tax deductible. I go talk to a Smith Manoeuvre certified professional mortgage broker. We're training up professionals across Canada to help Canadians. They get me in the right type of mortgage on my principal residence. I also have a rental property. Maybe during the refinance, I've got equity I can pull out to get my first rental property, right? Down payment. But I've got a rental property and I got renters in there and they pay me $2,000 a month. Typically what happens, what Canadians do, is they open up a dedicated bank account for this rental property. The rental receipts come in each month and then they go right back out because they got to make the mortgage payment on that rental property. In this case, let's talk about 2,000 in, 2,000 out for the expenses on that. Yep. Cash flow neutral. So money in, money out, and then they're still making the regular mortgage payment on the principal residence. Well, if they're implementing the Smith Manoeuvre with the cash flow dam accelerator, they can take those rental revenues each month, $2,000, and instead of immediately making the mortgage payment on that rental property, take that $2,000 and prepay their own mortgage against the house in which they live. So now I'm making my regular mortgage payment, plus I'm overpaying by $2,000 a month. And again, when that non-deductible debt goes down, dollar for dollar, that line of credit limit is going to increase. So it's reducing by $1,000 from my regular mortgage payment. It's also reducing another $2,000 from that prepayment. So I've got $3,000 I can pull back out.
I see.
Now,
so you're just adding an extra step. You're looping it in and out. It's an in and out strategy slowly over time that is converting more money from deductible to not deductible.
Well, that's right. Because if I'm pulling out $3,000 in this case, I need $2,000 to service the expenses on my rental property, the mortgage, but I've also got $1,000 I can invest in securities or stocks, bonds, mutual funds, mix, REITs, private lending, whatever the case may be, right?
I see.
Now, because I'm prepaying by $2,000 from the revenues and reborrowing $2,000 to service the revenue expenses, I can still deduct the interest on that $2,000 borrowing because I'm borrowing to invest with a reasonable expectation of generating income. I'm borrowing to invest in my business. And this is where we see amortizations on principal residence go from 25 years of bad debt to, I've seen 4 or 5 years.
4 or 5 years total.
Yeah, that non-deductible debt.
So this is, it's just a flow of money. It's literally one extra step.
Mm-hmm. Yeah.
Wow.
Yeah. And again, no new money.
Yep.
From my pocket.
And I guess beyond, I'm sure there's more here, and we're not going to be able to get to all these accelerators, but the idea is just allow money to flow in, flow out, and have it positioned in a mortgage that allows you for that kind of flexibility. And I guess have an accountant that knows what you're doing so they can claim it for you at the end of the year.
Yeah, no, that's absolutely crucial. A lot of people, they've been doing their own taxes for years. It's relatively simple process. They're employed, T4, all that stuff. when you're implementing the Smith Maneuver, there's an added level of complexity. And so now it's time to utilize a Smith Maneuver certified professional accountant who is trained in the strategy, not only in their profession, because again, we're dealing with the CRA. And when you have Smith Maneuver certified professionals on your side, whether it's a realtor or mortgage broker, investment advisor, accountant, insurance, etc., you've got people who are specifically trained. They know how to track the motions, the actions that are going on. And when it comes time to submit your tax returns, boom. And if the CRA ever does ask, it's really simple to say, yes, I can prove why this borrowing is tax deductible.
What does a pitfall look like for somebody that doesn't have the proper teams and systems in place? Is it just lost savings, or can it lead to further?
There's a number of things. If we're looking at someone who's a real DIYer, for some reason they don't want to use a mortgage broker. You don't pay a mortgage broker; they get paid by the lender. But anyways, if you try to do it yourself, you go to your bank and say, "I want to do the Smith Maneuver. I need a re-advanceable mortgage." The bank specialist is going to go, "You want to do what?" Okay, well, whatever that is, we do have a re-advanceable mortgage, and they're going to put you in their re-advanceable mortgage. And it may or may not be the best one for you. Chances are it's not. And if it's not, you're going to run into issues where you've got prepayment privileges that don't allow you to implement some of the accelerators.
Right.
There's a lot of things in those contracts that you're not going to know how to interpret that and how that's going to affect you down the road with the Smith Maneuver. On the accounting side, if you're not tracking the flow of funds correctly, if the CRA ever does ask, then you're going to have an issue proving why this is tax deductible. Maybe you didn't understand about mixing debt, keeping it separate, whatever the case may be. Again, there's things in the background. On the investment side, there's any number of, when we're talking about investing on a monthly basis through this process, a DIYer may say, you know what, crypto is the next biggest thing, or my cousin's internet startup, or whatever the case may be. And they may or may not be correct, but you're really exposing yourself to risk by doing things yourself. You don't pull your own teeth if you're not a dentist. You don't pull out your own appendix if you're not a doctor. Well, even if you are a doctor, you don't pull out your own appendix, but you go to the professionals who understand what's happening in the background. So that's why we're training up these professionals coast to coast. We got about 64 Smith Maneuver certified professionals, all the way from BC to Halifax.
Awesome. So just a little fun side story here. So when I first heard about Smith Maneuver, I told people because I thought it was fantastic. And one of the responses that I got from somebody was they said, dude, that is a super risky thing. So I'm like, okay, well, I got to look into this because if it's super risky. And what I found as I was researching it was the things that you just described. It was people taking money out of their home, investing it maybe incorrectly in something that's not actually allowing for the Smith Maneuver. But even if they are investing it in a way that they're not understanding the flow of money. They're putting themselves in the same situation as when you go buy a big screen TV. It creates a cycle, especially when you're going to folks who don't necessarily have the depth of information or knowledge to do this type of financial planning. So I think the savior in all of that is having somebody that is familiar with the strategy and is able to guide you properly on where that investment goes and making sure the money does end up back in the mortgage. I can see failures have, I would assume, happened and it's in some ways put a bad taste in the mouth. But when you actually look into the strategy, it's a stroke of genius. And as long as you're doing it properly, I definitely see the value. I mean, this is why I was chasing you to come on the show, because I honestly believe I would be surprised if some audience members aren't already applying the strategy. And I really, really do hope that those who aren't at least look into it, are familiar with it so that they can choose to say no. I think it's unfair for us to not know what's out there. As long as you know what's out there, if you opt to say, hey, it's not for me, then I think that that's fair. But I think on platforms like this, I think it's important that we at least have a conversation so that people, they know what options they have. Yeah.
And that really is my primary goal right now, is to make Canadian homeowners aware of the strategy. Let them look into it. I sell my book on my website, but you don't have to buy it. You can go to the library and check it out. It's about becoming informed, becoming aware of what options are out there available to you, which can help you improve your financial situation. And one strategy may be for you and another strategy not, and reverse that for somebody else. But if you're not aware, if you're not taking, if you're not actively participating in gaining knowledge about how you can improve you and your family's financial well-being, then there is no hope, right?
So the majority of our listeners are out here in Ontario, and I know you've got many folks running around and helping with this program. What does that look like for somebody in Ontario to get involved and to learn more, and not just read up on the strategy, because that will happen, but actually implement the strategy? What should they do?
Yeah. Firstly, read the book. Try to ignore anything out on the internet. As we talked about, there's a lot of misinformation out there. You've got strangers asking strangers what they should invest in, what type of mortgage they should get. So avoid all that. Familiarize yourself with the strategy by either buying the book and reading it, going to the library and getting it out and reading it. If you want to learn more, we've got a homeowners course on smithman.net. We've got the Smithman calculator as well you can play around with. But when you're ready to really look at implementing the strategy because you think it is for you, at smithman.net, there's a way that you can connect with us so that we can connect you with Smith Manoeuvre certified professionals in your area, mortgage brokers, realtors, investment advisors, accountants. So now you can enlist these financial professionals to, bolster your understanding, fill in some of the gaps, and also, show you how you can move things around that you didn't think of before, quite likely, and help you implement it. And all these professionals of, regardless, realtor, investment advisor, accountant, whatever they are, mortgage broker, they know each other. And so they can speak to each other about your file, which people really enjoy. Having an accountant over there, investment advisor over there, mortgage broker, and these professionals don't know each other, that's, things can get tricky. So we do have these Smith Manoeuvre certified professionals, which can sort of bolster your understanding, answer any questions you may have, fill in the gaps, and then actually help you implement the strategy and stay with you while you're in it, because things are going to happen. Life changes happen. You want to move your house, divorce, death, illness, plus a lot of good things as well, relocation because you got a promotion, whatever the case may be. But all of these things need to be handled correctly when you're going through the implementation phase of the Smith Manoeuvre.
I can really see that conversation getting very exciting once you've overcome that. I mean, given all of these accelerators, I feel like when you add a few of the accelerators that you maybe read in the book that don't understand, I could see that being a very eye-opening experience for Canadians. So Robinson, I really appreciate you taking the time. Guys, support this episode. You can hit the like button. If you have a comment or a question for myself or Robinson, you can leave that down below. But this has been super valuable, and I really appreciate you taking the time to join us today. Maybe let us know where people can find you personally, and we'll let you go out and continue to broadcast your message.
Yeah. Well, smithman.net is our website. And there's a contact button there. So yeah, please just everyone who's listening, whether or not the Smith Manoeuvre is for you, there is something for you. So just get out there and learn and take action.
Awesome. I think people will today. Robinson, thanks again for taking the time.
It's been a pleasure.